Okay, today we are going to be reviewing a trading plan sent in from a viewer. Mike decided to send in his trading plan and he wanted to get my opinion on his trading plan. Now, I got to tell you, I'm not going to sugarcoat it. I'm not going to be mean, but I do want to give as much constructive feedback as possible. So I'm really excited that we go through this plan and I want you to take notes because your plan will be different than mine. Mike's plan is going to be different than mine. But at the end of the day, we need to create a plan that fits our own personalities and our own lifestyles because we can't make a plan that we can't follow. Elsewise, why even make the plan? All right. So let's jump into this. So Mike sent me this plan here. Now, I'm going to zoom in and we're going to go through each piece. And Mike is watching live and we'll be taking notes as we go. So really, really, really do take notes as we go. We're going to be going through quite a lot. Let's scoot over here. So I assume he's going from top left to bottom right. Now that is a big assumption of mine, right? I don't know if that was the intention. I assume it is. So that's my first note is for me, I like to have it in this format where I'm going down my path, right? I like to look at it like a funnel. You could look at it in different ways, right? But first off, Mike, what I would do is maybe have some sort and I see your lines here and maybe your brain works differently than mine. But having it structured in a way where it's like a flow chart, well, I guess that is. But just in a way that like there's zero chance that you could get lost. So stocker ETF identified, run through the outlier screener, stock price above 20. Okay. So he's talking about his screener notes here. So I assume that means he's logged into outlier and he's gone over to his screener and this is his screener criteria. So first, stock price above $20, 1 billion plus a market cap. It's a 10 over 20 and stock price over 50. All right, that's a good start. You could do that in the screener. Let's do that real quick. So if you go over to the screener. So for Mike, let me reset the filter. He's talking about leaving everything wide open and price. Wait, hang on. What did he say again? Over $20 and over $1 billion market cap. Over $20, so minimum price is 20. He must be a snob like me. And then over $1 billion in market cap. So let's scoot this over. Okay, over 1 billion in market cap. Very cool. So now looking at this, the only other thing I see on here is a 10 over the 20 and price over the 50. What's nice about this is you can actually hit that as one item, which is the uptrend indicator. So that'll help you right there. If you haven't already selected that, I would go through and say uptrend indicated. But also, I would also light this up, fear and greed heat map value, because if you don't change it, the default was like 10 to 30, and that's going to give you a very narrow range. Let me show you what I mean by a heat map value over here. So the heat map value is measuring the fear and greed value. And if you just leave it at the default 10 to 30, right, you're not going to be able to capture big moves like this. Right, so this buy signal came when it was at 35, so it would have captured that one. Let's see, this buy signal came when it was at 41, so it would have captured that one. This buy signal came when it was at 69, so you wouldn't have been able to capture that buy signal, right? So for me, I like to do basically all the way open except 90. So from 0 to 90, that's what I would do personally. And that's what I have listed on here. In fact, when I go to my screener criteria, I have a little bit different, but heat map 0 to 90. That's what I would do. Now, one thing, Mike, as well, is that your trading plan, trying to condense it into one slide in PowerPoint. I mean, that's a lot to put in one slide. It might be a little bit easier if you do make one slide per thing, but that's up to you. So let's move to the next step here. Is the golden ticket unlocked in Outlier? So I assume that he means, if we click into here, the master key. So the master key is the SPY signal, the market trend, the market breadth, and the sector breadth. All of these four need to be unlocked for the master key. So I assume that's what he's meaning right here. So maybe just tighten that up and say, is the master key unlocked for this stock in Outlier? If no, sit in cash and don't F up. I do like that. I do like that. That is a good outcome. But if yes, does it pass Outlier 9? Checklist screen 9 for 9. Check order blocks carefully. Okay, so here's what I would do next is because I do have this slide, it makes it easy for me to go through one by one, right? So when I evaluate a stock, I can go through and I can actually like tick these off as it goes, right? So for example, we have a buy signal on the SPY. So I can go through and I can say, okay, right now, perfect. That's green. I know that for sure. The SPY is still trending up. Good, easy. And then the SPY breadth, however, is bearish. So I'd mark that red. So to add to this, Mike, I might have like a little checkbox, maybe something over here. It's like market breadth, market trend, market signal, and then sector breadth, sector fear and greed, kind of maybe some sort of checkbox over here. That would be good. But if not, sit in cash and don't F up. Now, I'm excited about this because Mahesh is planning on having the OVTLYR 9 be like a one-click button in the screener at some point in the future. That'll be sick. That'll be sick. That'll save us a ton of time. But let's say yes, and let's move down here. Options chain. So he's moved from the screener. Let me see on my screen here. Okay, so he's moved from the screener to the individual stock to do the OVTLYR 9. Okay. I don't see anything wrong with that. If that works in your plan, by all means, go for it, dude. I really like the fact that you've taken parts of my plan and put it into yours, but of course, make it your own. Options chains, 21 to 31 days, 20 to 31 days. I like that. Is there enough open interest over 250 and a delta around 80? So I like this here because you're specifying which option chain you're going to look at, right? Because if we go look at option chains, there's an unlimited combination, right? There's weeklies, monthlies, quarterlies, and then there's so many that you could choose from. I like that you specifically narrowed down your trading window on your options to those options expirations. Well done on that. Is there enough open interest over 250? Again, that's one of my rules and I like it. And a delta around 80. Now, I would add the breadth right there, but it seems like super familiar with what I'm doing here. Sorry, 21 days, 250 plus, bid-ask spread around the 80 delta. So I don't really see any issues with this. So if no, is there something acceptable? Oh, is there something close I can accept? Oh, I like this. I like this. Now, you've seen me do it before, Mike, clearly, where if it's maybe 21% extrinsic value or maybe 220 open interest, then I'm interested, right? My goal here is I'll fudge my numbers a little bit, right? I'll fudge my numbers a little bit, but I'm not going to fudge them all, right? For me, looking at this, if I saw it was at maybe like 27%, but it had plenty of open interest, that's fine. Or if it was a little tight on open interest, but the extrinsic value is super low, I'm interested. That's where I'll fudge a little bit. So I like how you actually wrote that out. If no, is this a stock setup so well where I would use the OVTLYR buy and sell signals to buy and sell the stock? So I assume the stock outright. Okay, sure. If not, sit in cash. If yes, use OVTLYR sizing model and calc half ATR price. Modify the quantity of shares to 5% of portfolio. Okay, cool. I would specify on here what that formula is, or just plan to use the spreadsheet because that makes life a lot easier. But to that point, for those of you who don't know, this is my position sizing formula right here. I got this from Larry Height, and it's so great because it allows you to basically position size correctly on any stock, whether it's Coca-Cola, which is super boring, or Tesla, which is super exciting. It makes it really, really easy. So maybe specify in here what that formula would be, right? I'm just being super pedantic at this point. You've done a great job. But let's go back this way. Is there something close I can accept? Yes. Is the option under $10 with a 25-cent bid-ask spread? I like that. This is one of my unwritten rules that I kind of gave up recently, and I'm glad I did, because had I not, I wouldn't have taken a trade that actually paid really well on Palantir with a 25-cent bid-ask spread. I like that you tighten that up even more. And that's really important because we want liquidity. If you can't get into a stock without having to pay a bunch for it, you won't be able to get out of that stock either. right? If you can't get in, you can't get out. And if you can't get out, you're going to get stuck. If you get stuck, you get hosed. And then if no, sit in cash. But yes, use this. Okay. So the same as that. Okay. Where are my exit triggers? Use the golden ticket, slide 16. Okay. So, Mike, specifically, I would look, man, I've got all the exit triggers in the world. I have the most paper hands of all time. And that's because I don't like risk. If a stock is working, I want it to work with me. If I have any reason to get out, like it runs into an outlier block, or I got a sell signal, or a gap and crap, or whatever the case is, I'm getting out as fast as I possibly can to protect my portfolio. I would specify what those are, right? Because while I have these written out for me, you may not agree with one of them, right? If you don't agree with one of them, you might not agree with two of them. And if one of those two happen in the course of your trade, are you actually going to follow it? That's up for debate, right? So I would actually write those down specifically for you. I mean, you could copy and paste it if you really wanted to. But then when you do that, you make it your own. Place order at limit. Don't chase, make money, less risk. Okay. This, I like that you said place a limit order. Very important. Very important to place a limit order. You don't want to place market orders. I actually don't have this listed in mine. Maybe because it's just second nature. But whenever you put a limit order in, you cannot get filled unless that price is what you say or better. It's like if you walked into a car dealership and you said, you know, I want that green car, and I want to pay $32,000 and not one penny more. And he's like, well, okay, fine. I'll give it to you for $32,000 and not one penny more. But if you walk in to the dealership and you say, I want that car, what's it, you know, whatever it costs, I want it. Then the dealer starts licking his lips like, I got a sucker today. I'm going to charge him $64,000. So I'm going to double the price of this car. And he's going to get so screwed and he has no idea, right? When you place a market order, you have no idea where you will get filled. Hopefully it'll get filled at the market price, but there's a chance it won't. And it's happened to me. I have, the very last time that I placed market orders, I got freaking hosed because it takes the very next order. And if that very next order is far and far and far away from what you want, doesn't matter. You're going to get filled. Yikes. No, thank you. So well done on that. But I would actually amend this. I would amend this. And y'all have seen me do it too. Sometimes you got to nickel it up, meaning you got to pay 5 cents more. Sometimes you got to nickel it down, pay 5 cents less when you sell it. And you might have to chase it a little bit. In fact, that kind of shows that you're right. I forget which book that I read it in, but I think it was How to Make Money in Stocks, the orange book. If it's hard to get filled, that means other people are also wanting it and they're bidding up the price. And because they're helping bid up the price, you may never get filled, right? In fact, I know for sure it was in this book. Hang on, we're going to teleport. I know for sure it was in this book. Because he talked about an example in this book about if you say, oh, that stock's too expensive for me, you know, it's 10 cents off of where I want to get in. I'm not going to buy. I'm not going to spend 10 cents more. And then you never get in, and that happens to be the one stock that takes off and does incredible things. You didn't get in because you didn't want to pay 10 extra cents. Yeah, this is a great book. I don't follow everything in this book, written by a market wizard, Roy Monio. I don't follow everything in this book, but there are some things that I do follow, and that would be one that I don't mind chasing it up. I really don't, because if it's going up, that means other people are trying to buy it as well, and I'm okay with spending 10 extra cents, and then being able to be in the trade. So if you do want to put some sort of limitation here, you could say, you know, don't chase it up by more than 25 cents if it's an option. You do something like that, but that's up to you. Exit on triggers, no, I assume effing up. Exit on triggers, no effing up. And that's really difficult, right? And that's why I say I think it would be advantageous to you to write down what those exit triggers are. And I know that this goes against the normal zeitgeist out there, whatever the word is. But exiting a position is so much more important than entering. But entering is the sexy part. Entering a position is what everybody gets all excited about. Specifying specifically where you're going to get out is so much more important. And let's look at Tesla stock real quick. Right, if we go to Tesla stock, I can guarantee you a lot of people had this entire move up, which was 120%, and they rode it all the way back down because they did not have a defined exit plan. Now, was it sexy and fun to buy it on the way up? Yeah, of course it was. But was it just as sexy and fun when it hit this price on the way down as it was on the way up, right? This price is unchanged. This price from here to here, this 370.09, it's the same price. But it feels a lot better to be hitting 370.09 on the way up than it does to be hitting 370.09 on the way down when it was all the way up at 485, right? So that's why I say exit signals are not sexy, but exit signals are exactly what you have to spend the most time on, making sure that you know exactly where you're going to get out, and then get comfortable with the fact that you're not going to hit the top, right? Except for me, I happen to hit the top on Datadog. I happen to hit the exact top candle on Datadog. Don't ask me how I did it, other than following my plan. But yeah, I happen to hit the exact top of Datadog right there to close. That doesn't always happen, okay? And you can't know at the time that will be the top, right? Because a lot of people, as Tesla was going up, each day got more and more uncomfortable for them. Each day that passed, as it was pushing to new highs, they're like, oh man, this is the top. 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 And then of course the next day, well, that couldn't have been the top. It has to go back up. Oh man. Okay, now we're going back up. Oh yeah, of course. I told you that wasn't the top. Of course it has to go back up. No, it's going back up. I promise you it's going back up. It has to go up. It should go up, right? Oh, okay. Okay. We found a little bounce right here. That was just the dead cat bounce. It's going to just go right back up, right? You can be uncertain and scared, or you can have a plan. You can be uncertain and scared, not having any idea what to do, or you can have a plan. Let's go back. Roll if appropriate, only for credit. Add rules as I learn them. Good point. Add rules as I learn them. Exit triggers, no effing up. Okay, very cool. So, all right, let me ask the chat. Since Mike was really cool and let us go through his plan, where are some areas of weakness that you think he could improve upon? I would really like to hear from you. Patrick, actually, I like this. I can't wait until I get uncomfortable with making too much profit. Dude, I'll tell you, the first time I ever had that happen, I was in a trade, I was in KHC, I was up 313%. And I was like, I've never made this kind of money before. This is crazy how great this is doing. How do I get out of here? How do I make sure that I keep as much as I possibly can? And that's where rolling comes in. So yeah, Mike was super cool for letting us go through this. Big takeaways here, Mike, is I would add more detail. Now, my trading plan, and of course yours will be different than mine, but I have a slide for, each individual section because I want to make sure that I have, all my ducks in a row. Now, I will tell you that as time has gone on, I've added more and more and more slides. Reason being is that you will encounter something and you'll have to make adjustments like this right here. I just adjusted this maybe 3 weeks ago. And this was because the market, the breadth cycled higher than I had ever seen. Let's go over to what I mean by that. By the breadth had cycled higher. Full stocks, okay. The breadth cycled right up here. Like it was such a short cycle to go from bearish back to bullish. I didn't even notice that happened. Thanks to Albertone for pointing that out. I owe him big. Because usually when you see it go from bearish to bullish and bullish to bearish, you see these long cycles, weeks at a time. And this one was like a blip and came right back up, and then it went down. So because it cycled so high, I was like, ooh, you know what? I need to adjust my rule on this. So I adjusted my rule to say, if the cycle occurs on the market, if the cycle reset occurs on the market, even at a high value, you can trade the sectors that continue to rise and are bullish after the market reset happens, right? So at this point, I was now looking for new trades where I wasn't before. So I needed to make a change to my rules to accommodate for that. And this will definitely evolve. This will definitely evolve. Mike says, and again, Mike, really appreciate you. Makes total sense. Exit plan before making the trade. Yeah, that's such a huge deal. I saw this in our Discord. Someone posted this, and I shared it into our meme so I wouldn't lose it. Hold tight real quick. This is Steve Burns' rules. Plan your trades ahead of time, right? So maybe some of these you can add, right? Plan your trades ahead of time. Now, as I go through, usually, in fact, no, I'm not just gonna like make this up. I'll show you exactly what I do. During the day at some point, I'll sit down 10 minutes or so, and I'll say, okay, this is my plan for the day. Plan for the day at 12:24 p.m. SMCI, market breadth, different sectors, this particular stock, whatever, right? So I know what I will do. I know what I'm going to buy. I know what strike I'm going to buy. And I know everything that I need to do because I trade at one time during the day. And in fact, that may be something you want to add to your plan over here, Mike, is, oh, you did. Okay. There's your trade window right there. I like that. I like that you've established your trade window because that may not work for everybody, but it has to work for you. So sitting down earlier on in the day and coming up with that plan. And that way, once you hit your trade window, once the window's open, then you know what to do and you can execute without feeling lost, without feeling confused, without feeling like, oh man, I got to go do all this, right? Now, does that entail extra work? Yeah, right. It's a lot of extra work compared to, oh, look at that stock, I'm gonna buy it. Oh, look at that, I'm gonna buy it. Oh, this jackass on Twitter was like, wow, you should buy this stock. Having a plan, even this plan, is better than 90% of traders. This separates you from everyone else. I like to say having a plan separates the best from the rest. And that plan will evolve over time. So really good. I mean, I don't have a lot of faults to this, Mike, other than I would like to see more detail. Right? If I were a college professor grading this, which I suppose I am in OVTLYR University, if I were a college professor grading this, and in fact, for those OVTLYR U students who are watching, I will be asking you to come up with a plan later on. I want to see detail. And the reason I say I want to see detail is because if you have everything written down, you'll know exactly what to do in the situation. But for example, here, the exit triggers, we'll just follow Chris's exit triggers. I don't know if you would. It's too vague. Is there something close I can accept? It's kind of vague too, right? If you are going to fudge a number, maybe write that number down, what that looks like, especially as you're newer into trading. As you get older into trading, well, not older, but more experienced with trading, you'll know it as like the back of your hand. So yeah, I mean, you did great. I would give this a solid. I would give this a solid B+. And the only areas I would say is just add more detail. Show your work. Show your work. Okay, let's see what some of our outliers wanted to say. And I really appreciate you guys watching this live and giving constructive feedback. To Albertone, really solid plan. Literally standing on the shoulders of giants. Which is what I do. Right? I didn't figure this out. So Joe says he's had it happen. He missed out on a huge trade because he didn't want to spend a couple extra pennies. Yes. Now, Joe, like, it probably was moving at that time, wasn't it? Right? You're like, oh man, I don't want to spend $20.02. I just want to spend $20. And it went to 2005, and then 2010, and then 2020, and then it continued on. You're like, whew, those extra 2 cents would definitely have been worth it. Yeah, for sure. Hey, if you never sell, you'll never get paid anyway. Good point. Albertone says, logically check market breadth first to save time. I was thinking that as well. Maybe moving a few things around. I like to start with the market and work my way down. So let's go over here real quick. And that's why I've structured the outlier 9 in this way, because it's top down, right? If the market doesn't set up, you don't have to look at any sectors. If the sector sets up, you can look at stocks. But if this doesn't set up, you don't have to go to this. And if this doesn't set up, you don't have to go to this. And it makes it a little bit easier to structure in a top-down fashion. So well said, well said. Georgia says, I like to look at the SPY first, and that makes a lot of sense. Add a monkey to the top corner to remind him not to get monkey hammered. Well done. Aussie Ian says, write down possible exits in your journal on every trade, even if they are the same as the last one. Okay, I like that. Now, I got you. I do that too. I actually do that every time. In fact, not only do I do it, but I do that in the Discord as well. Reason being is at some point in time when you go and you are checking on your trades and seeing what you've learned, how you've done it, and things like that, you want to see what is the reason you closed it, right? Heat map target was hit for this one. Heat map target was hit for this one. Now, looking back, I can go, okay, wait a minute. In fact, let's do that right now. Let's do this right now. Let's go look at Palantir that I closed on 5/16 here. Right. So I said my heat map target was hit on this date right here, which was really solid, right? Look at it after that. Look at it after that. So that helps me reinforce that the heat map target being hit actually is a great exit point. Now let's look at GM. Let's look at GM. Same exit point criteria. That did well too. Got in here, got out over here, and it went down after that. I got to tell you, these heat map exit signals, if you, I know, it is crazy to see how good these are. It is so awesome to see how good these are, right? And I'm not just trying to pat myself on the back. It is so cool to see it in action, right? So yeah, I like that. Exit plan before making the trade. And of course, writing down why you exited. Why you exited is really important. Okay, let's see. Scott, slightly confusing to me. Is a limiting position size to 5% of a portfolio, or does it mean risk? Great point. Great point. Because you really can have it in two different fields here. So let's do an example. Hold tight. Pulling up the position sizing spreadsheet here. Hopefully this is working. The other day, Google Finance was just like stupid and it wasn't working right. It seems like it's working today. Okay, so let's say, for example, you had a $100,000 account and you wanted to risk 5% per trade. So by design, if you got in at this price and got out at half ATR at this share size, it would be significantly less risk than 5%. 100,000 times 5% is 5,000. It is by design supposed to get you out before that happens. This is a absolute worst case type of a gap through your stop kind of scenario here. But let's say that the option price, I'm going to pick this one at random, was $10. That would only be 4% of his portfolio in an option size versus 5% of his portfolio in risk. But let's say it was a $25 option, right? Now that would be 10% in portfolio size versus 5% of risk if he was just trading for contracts. So good point. Maybe a little clarification on that. See, Ian, detail entry and exit price if trading options. Yes, for sure. It's great to see you too, Lenny. Was there any mention of order blocks in Mike's plan? Good question. I don't remember seeing order blocks. Maybe in the outlier 9, check order blocks carefully. Yeah, he had written that down. So well done there. Well done there. Mitch says, having subsections with full rules checklists might be worth having. Yeah, kind of like I was talking about, right? Adding additional steps. But, Mike, you could keep the same flowchart and then say, refer to slide 3. and then slide 3 would be this. Now, in a way, that's kind of what I do. Where when I have this funnel over here, it's just giving the detail that goes beside that step of the funnel. So yeah, that could totally work. I like that. Deep Thought says, I would alter the $10 option rule. As your Palantir trade recently proved, sometimes it's worth an extra $1 or $2 to capture a massive gain. That, yeah, honestly, that was a bit of a wake up moment for Chris, because I had that $10 rule for ages. And I just saw that Palantir trade, all OVTLYR 9 lit up, and it was like 1170. Like, it's not that much for it. It's what is that? 11% further. If I don't take this trade, I'm gonna really feel stupid. Because I gave up. I didn't spend another 11% on the option, and yet that paid me huge. Georgia says use OVTLYR 9 first, then screener. Yeah, that would make it a little simpler. I like that. Overall, I give Mike an A for mad effort on the plan. You know what? I'll bump that up to an A. Bonus points for sharing it on YouTube. Right, bonus points for sharing it on YouTube. Rick says, Flowchart seems to be running the screener before he checks a wider market. Maybe you run the screener if you've actually not worked on the market first. That makes sense. Good point, Julian. I didn't even think about that. Talking about options, ex-dividend dates. In fact, rolling the options. He said he's going to add more rules on rolling. Where is that at? Over here, on this part right here. He's going to add more rules on rolling once he learns them. But good point, right? Talking about options and expiration risk. In fact, I don't remember seeing anything about expiration risk. Now, that's something I'm really keen on, is if we get too far down and too close to expiration, you have a lot of additional risk. So 1 week out is where I look to roll out. If I can't roll out for a credit, I'll just go ahead and close it ahead of time. Even if I have not hit one of my exit signals already, if I get within a week, that's too much risk for me. It works because it's your job. Yeah, it's everybody's job, right? It may not be your full-time job, but it needs to be your job. But rolling when appropriate. What I see in paper trading can be either based on stock price, like an ATR, or when the delta is 1.0, could be, or really more adding 1.0 or 0.1, I should say, right? So from 80 up to 90. Great point. You could do either one. I like that. Deep Thought says, maybe even adding something like micro up your charts as much as possible before you open your position as a rule. If you open several trades, you can sometimes miss information that you need later. Yeah, so that's something that I like to do for sure. Good thought, Deep Thought. That was a deep thought from Deep Thought. After I put these on, I like to immediately go and put in my levels, right? I immediately want to know where I'll be getting in and where I'll be getting out. Oh no, the market's going down. Remember all those haters yesterday saying that the market's only going to go up from here, and you're so dumb, Chris? Yeah, that's okay. Just follow your plan. You don't have to stress on it. Let's see. Yeah, show your work. Bees get degrees. That's right, David. I like it. To be honest, the plan looks a little complex. Maybe we could at least simplify it a bit. Heat map exit signals are predictive and awesome. They are really awesome. Alana says, when you read the market as breadth is bearish, is that because it's not above the 10 EMA? That was because it turned upward. Okay. A little bit off topic here. But in general, on market breadth, when it crosses over the 10 EMA, I'm bullish. But once it gets over the 75% mark, I still like to buy it until it peaks and starts to contract. Right? Like right here is an example of it peaking and then contracting. Make it bigger for you. It peaked over 75, and I was good up to this point, and then it's like, okay, no more trades until it resets. It reset here. Okay, let's get busy again. It didn't go over 75. It got up to 74, but not over 75. And then it, I think it reset right here. Maybe it didn't reset, but it got really close. We didn't have any signals come through, and then this fell out. His 82 cents a day is hard at work. Well said. Good afternoon, Christopher. The complexity takes time, but it increases confidence. Yeah, and as you go through, you'll find more and more things to add to that to make it better. Versace. Will the platform ever cover futures? Unlikely. But if you translate, NASDAQ futures to the Qs and S&P futures to the SPY, GLD future we covered GLD to gold, USO to oil, you could get there. What's the main reason you roll options after a couple of days? Well, it's not that I roll them after a couple of days. It's after they've moved in my direction. So we'll go to Palantir. I'll show that example. Right. I rolled this once. It was a huge roll. It was almost two rolls worth right there. But I bought it here and I rolled it up here because the price had moved so much. And I did that because following my plan, they moved one ATR my direction. I closed the original and bought a new one, and it took partial profits now. It freed up capital now, and it keeps the trader alive. Somebody sent me an email. I was like, hey, don't use the speaker example anymore. Use it like refinancing your house. And I was like, actually, that might be even better, right? Imagine you originally financed your house at 5%, and you can refinance it later at 3.5%. And you still keep the house the whole time, and then you can still sell it later on. Yeah, that was a decent example. I like that. Let's see. So John has a mind map for his process. Very cool. Yeah, it really is awesome. He's got everything all documented. He did a great job. Mike did a great job. Lenny, hey, I have a simple question. Why don't we smash the like button every time we're together? Not only to support Chris and all the team, but to manifest that we are a team. I like that. Manifest we are a team. Should we backtest our plans to validate? Absolutely. Absolutely. Now, that is difficult. Now, in tomorrow's OVTLYR University, I'll be talking specifically about how to backtest. And in fact, I've done it live on YouTube. Somewhere in the catalog, you can see me backtesting, and it's boring AF. But you know what it does do? It makes you money. It mints you money. It turns the stock market into something to be afraid of, to an ATM. Okay, when you can come to the market feeling confident in your trades, having the data in your back pocket, knowing what your strategy has done previously, and then you could apply that to today when we don't know the outcome, and yet you feel confident that whatever the outcome is, you're going to be fine. That changes everything. That changes everything. Mike says, cramming on one side doesn't work. Love the comments. We'll have the details. Yes, very, very cool. Mike says, can't say enough, Chris, for taking the time. Learning from those who know more saves me time and money. Yeah, dude, you are so welcome. Again, I want everybody to put in the chat, thanks, Mike. Everybody put in the chat, thanks, Mike. Thanks, Mike, for allowing us to take a look at his trading plan. I really appreciate you, Mike. That was super brave of you to do so. And at the same time, it was super useful for everybody to watch and learn at the same time. You are a rock star, my friend. And all of you guys are rock stars for having watched this. And you know what will make you an even bigger rock star? Is if you picked up OVTLYR for just 82 cents a day. And only if you're ready to save time, make money, and start winning with less risk. I'm just saying. And then you click one of these two videos as well. Have a fantastic day, guys.